Hey, Walter here. You ever been driving down the highway at night and you try and figure out what can I do to make sure I stay awake here on track? I used to always, I used to have to drive for 2 days to get home, and it was sunflower seeds and Mountain Dew that did it for me, which I don't actually eat either of those now or drink. I don't. Those aren't part of my diet anymore, but they used to be, and they would get me home. Anyway, uh, in trading, I have a similar thing. I use a particular method, and you've probably run across this before, for identifying where the market is moving. And that's really the most important thing that I'm trying to figure out here is where is the market moving? And so I have my handy dandy trend indicator thing here. And all this really is, and I get a lot of blowback on this. I want to explain kind of what this does. All it really is a method of figuring out my direction. How do I stay on track? Okay? So what I'm doing here is I'm going, all right, I'm going to trade these markets where a lot of our retail trading buddies are all piled in on one side. And I always want to get on the other side. Now, that's where we get most of the pushback. And let me explain this to you. This is an empirical question, right? You don't have to, by the way, we trade this way in the, before I forget, it's a small account, big profits course, taking a little $1,000 account and ramping it up quickly over 300 trades to 100 grand. That's what we're trying to do anyway in the course. And you can get in on it. You can see this happening by clicking the link below this video. Now, reason why I use the crowd to determine where we should go is the same reason why some of the best traders in the world you've ever heard of, they do the same thing because they understand this principle that the majority of the market is wrong. The majority of the market is fearful when they should be greedy and greedy when they should be fearful. And this is an empirical question. You can actually go back and map, and I've done this. You can map the open position ratio, which is all this is. It's just how many traders, for example, on the pound yen are buying and how many are selling. 79% of the traders at this broker are buying pound yen and 21% are selling. The pound yen is in a downtrend. What's going on over here? Um, Dollar yen. 75% of the traders are buying the dollar against the yen, and 25% are selling. The dollar yen actually just fell off the cliff. I can show you actually. Here, let me show you. That's the Aussie yen, or the Aussie. Let me show you the dollar yen. Dollar yen's right here. It just fell off the cliff. So you got to ask yourself a question. Why would 75% of the traders buy this chart? Now, if you can think back to when you first started trading, you can answer that question. I remember doing the same thing. In fact, I remember doing the euro, selling the euro for years. And if I had just swapped my position and decided instead to buy instead of selling, I would have saved myself a whole lot. I probably would have shaved off a year or two of my learning curve, which, as it turned out, was over 4 years of losing trying to figure this stuff out. So let me zoom back here on the euro because I think this is a really important lesson. So when I first started trading, the euro was brand spanking new. Oh, it doesn't go back that far. Oh, yeah, it does. Um, I thought this broker didn't offer. Sometimes they don't offer you that much data, but this one does. Okay, so when I first started trading, the euro was brand spanking new. And so I was trading here, and the euro actually got down to 86 cents or something like that. 84 cents. Look at that. And so all we thought of when we first started trading was all you got to know. In fact, we even said this. My friends and I who were trading, we said, all you got to know with the euros, it's going down. And so when it went up, we were like, that's interesting. But then, of course, it came back down. Now, when it started to do this, this is when I decided that I was going to be the euro seller, especially when it broke a dollar. That was a big psychological barrier that the euro broke a dollar back here. See, it tried to do it, came back down. And I kept thinking there's no way they're going to let the euro be over a dollar. And you know what happened? Well, the rest, of course, is history. It's one of the greatest bull markets in the currency markets ever. And if you're an Elliott wave dude or whatever, you could probably count a bunch of waves here and all that. So then guess when I decided to buy the euro? Yep, Oh no, it wasn't that top. It was this top. Sorry. So then I decided, you know what? I think the euro's in an uptrend. So I literally just see where this can't. I'll zoom in because this is hilarious. It's not that funny, but this day right here, this day is. I'll never forget. I was in an internet cafe that I went into every night to trade. This is June 16th, 2003. And on this night, I bought the euro. Notice that it says it made a high at 119.32. I bought the euro at 119.11. That's when I bought the euro. It peaked out at 32. It fell on the day and closed down there at 118.20. So it was down almost 100 pips. And then it just fell from there. And in fact, it went in an extended retracement. So, I mean, this is classic beginner trading, thinking that as soon as you're sure that it's going to keep going up, that's the pullback. And as soon as it starts off on a trend, you think, oh, it's not can't this got to turn around. I mean, and that's exactly what all of our friends are doing. And so we can use this as a tool to determine the strength of trend. And that's all I'm doing here. I'm getting my direction, I'm getting my bearings based on this, and then I still have to use the chart. So I'll give you an example. See the euro pound right here? It says 72% of traders are shorting it, and only 28% of them are going long. So you would think that you want to go long, and I do want to go long, but the chart doesn't match. The chart's totally ugly right now. I'll show you the 6-hour chart here. This is not a bullish chart. If anything, this looks like maybe like a shoulder, head, and shoulder, and we've broken down below the neckline. Like that's kind of what I see here. And maybe you can squint your eyes and see the same thing, but it looks something like that. This looks like a bearish flag with a trendy kangaroo tail. All about this screams sell. And that brings up an important point. Sometimes, about 1 out of 11 times, you'll find that the crowd is actually right. So maybe this is one of those instances. I tend to think that at some stage, maybe down here or something, we'll see this pair bounce hard and go higher and maybe re-engage that uptrend. But it certainly isn't an uptrend now. It was back here, but this is an extended downturn. So, it's really the two pieces for me. It has to have both the open position ratios trending. So I don't want to trade the Euro Singapore, the Euro CAD, the USD CAD, or the Euro right now. I don't want to trade any of those. And I actually don't even want to trade the ones that are light blue or orange because the orange ones are almost red and the light blue ones are almost blue. So I don't want to trade those either. I just want to stick to the reds and the blues. And right now, there's really nothing to go along with because as you can see, the euro pound charts doesn't really match up. So that's how I use the open position ratios. You can go and see the same thing. Like if you look up the CNN Fear and Greed Index, have you heard of that? Actually, that's pretty cool. I can share that with you. The Fear and Greed Index in CNN. So here's the CNN Fear and Greed Index. Same idea here. When it gets low down here and it's a lot of fear, you want to be buying shares. You want to be buying the Nasdaq, the S&P 500, all that. And then when it's extreme greed, you want to think about, hey, maybe lighten up or even maybe turn short, go short, or protect yourself with some options if you trade shares. So it's the same idea. There's nothing really uh, crazy about this. This is a pretty, and they'll even tell you how it's constructed here. But I just want to make sure that you understand that the principle here, which is what are you using? Like, how do you know that you've got your bearing set in the right direction? If you use something that you can rely on every day, like I do, and like we do in the Small Account Big Profits course, it can be it just kind of, it makes everything so easy because you know what to focus on instead of like, oh, what should I trade today? Or what should I do? Should I go long? Should I go short? It looks pretty. All you're doing now is you're filtering everything out. You're going, I'm only going to trade the easiest markets that are flowing in one direction. And once you do that, it makes it at least a lot more simpler for me. So I hope this helps. I wish you happy trading. We'll see you in another video.